And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody. Welcome to the LimitUp podcast. I'm Dan Hodgman, sitting down with, as you can see, Jack Pelzer. Jack, what is going on?
I wish that I knew, as probably a lot of people out there know. I mean, what was it? 2 weeks ago when we did this, I said we're going to have to stop doing it if there's a down market day every time. Well, this time the market is up, but that belies some, I'd say, worse trouble going on in the world. Dan, how are you looking at it today?
Jack, it is a timid up move here. I mean, obviously, we're seeing phenomenal volume. No doubt about that. You got NQ breaking the million contract mark, but I mean, this is the exact prime example of when they say sell the rumor, buy the news. I mean, that's what we got going on here. We knew bad things were coming. We thought it was going to happen. We got it last night, and now we can talk about crude oil, because I think crude oil really is a main topic that we should talk about with. And I guess we haven't said it, but if you haven't noticed, stuff's going on with Russia and Ukraine right now, and China dabbling over by Taiwan. If you haven't noticed, I assume everyone's kind of caught some wind of what's happening. But you got equities kind of taking a little bit on the chin last night to turn this thing around. I mean, you've got NASDAQ up almost 1,000 points from its low, which we saw in the open. This is wild.
Yeah, this is why you got to be careful when you're digesting news of anything. I mean, categorically bad stuff happening today in Ukraine, but at the same time, there's never been anything so telegraphed, I guess you could say, where this move, this correction has been slow rolled over the last 2 weeks. And this morning, we'll have to see what happens next, but I presume a lot of people got caught short. I can't necessarily blame you for being, they're taking Kiev, or it seems like the worst case scenario almost of what could happen here. And I think a lot of people got cut short. And then the NASDAQ, all the growth stocks have been, I always think of the Simpsons with the, where you stop hitting him, he's already dead. That's been the NASDAQ for a while. That's been so beaten down at this point that there was some room to pop, I guess. I don't know. It's a weird day. VIX down on a first invasion in Europe since World War II. It's weird.
This is crazy. Well, that, and then you've got the one that really just, anyone that's watched any videos where I talk about crude oil knows my stance. I'm not a fan of high crude oil prices, as my truck does not do well in gas mileage. Jack, I filled up the other day. It was almost three-figure, a full Benjamin to fill the truck up with gas. It was a painful day. But we got crude oil this morning in the overnight session. No surprise here. A lot of this is going to, we have effects on oil. We're currently buying about 600,000 barrels a day from Russia. You got crude oil popping to $100 a barrel, first time since January of 2014. Painful to see it get up there. But then what's crazy is you get this sell-off. We go from $100 down to $92. I mean, talk about a move on a Thursday after a Thursday.
Yeah. I mean, sometimes when you have these headline risks with the geopolitical stuff, sometimes people get over leveraged. The stuff moves quick and they have to puke these positions quickly. If you are long oil futures, right, up around 100, just going for it, you'd realize pretty quick that you are indeed wrong. And then it's a race to get out.
Mhm.
Where it goes from here, there's still going to be a lot of pressure, obviously, on supply. I mean, not a lot of.
Yeah. And Jack, let's, you're Mr. Economist over here. Let's talk macro view on this
Yeah,
too,
let's
because I
do it.
think that's important for us to think about. We can look at this from a day trading perspective. When you see volume coming in, markets turning around, like, great, that's phenomenal. But we got to talk macro. Let's take a bigger picture look at this and think about this, where this goes. I mean, if Russia, Ukraine continue this fight for a while.
Yeah, I should preface this whole section with, I am a great admirer of the Russian people, self-proclaimed Russophile. I've been to Russia. So as you can guess, I'm giving all these caveats because it's hard to cover this scenario without saying some disparaging things about Russia, because what else is there to say? They just like invaded full-sale or invading a country and I don't know, trying to rebuild the Soviet Union or something.
Mm-hmm.
It's from a macro level, this, we can do some casual swearing. This shit is so illogical that it's hard to know where it's going. I mean, on paper, none of this makes sense. I'm trying to figure out what scenario where Russia, a country with a GDP on par with the world superpower of Italy, is going to come out better when they get some provinces in Ukraine or all Ukraine, but they're kicked out of the banking system. I know places in Europe already, the sanctions I saw today, they're not even allowing flights from, like, you might not be able to go anywhere really if you're a Russian citizen. And it's on the Security Council, it's like all the countries are against them. Even their sort of allies are just kind of like tacit, going along with it, I guess. But I guess it comes down to, like, that's going to make energy especially very volatile. Very volatile. My mouth is dry from all this talking about this today. But Russia's obviously a huge exporter of energy. And as you look around, there's not a ton of necessarily friendly countries out there that are big into oil, besides, the US and Canada. And this is going to go on and on. I mean, I think he's finally, there's a lot of parallels to other things in history I don't want to get into too much, but it's really third time is the charm. I think he's really stepped in it this time, old Putin has, because this is going to draw out for a long time, like on a scale of years. So
yeah, I don't think this is a short time frame thing. I mean, there's massive effects, and this is, long-term stuff's about to happen. Obviously, Russian currency's been kind of shut down now. You can't go use that anywhere over in Europe. I know that's what Biden was saying today. We got more of these sanctions coming on. There's things we got to think about too from our end of the spectrum. This oil, I think, is a big deal, right? If we stop, or if we have issues with getting oil from Russia, which we're doing pretty heavily right now, Saudi Arabia has not said they're going to up production to offset this. So that requires us to make new decisions there. We're going to see oil prices get back to those $150, $180 a barrel. We're going to see oil skyrocket, gas $5, $6 a gallon. I mean, there's going to be some major effects here. And that's really where we got to start thinking about stuff from a trading perspective too, like what you're going to be able to do with that. I mean, obviously we want to think about, if you got a gas guzzler, but like me, do you go out and buy some economically friendly gas vehicle? Maybe, but from a trading perspective, you got to think about where these directions of these markets can go. Obviously, oil, that $100 mark, Scott, we got to pay attention to that.
Here's what I'd be looking at in the macro stuff. It kind of reminds me of, there are portions of 2020 and the initial COVID roiling the markets, where it became sort of a bad news is good news because the Fed would print more, the Fed would keep interest rates low. And now, before all this boondoggle in Ukraine, what was slowing down the market is the expectation that the Fed's going to more aggressively raise rates because the CPI has been running hot, inflation's been running hot. And now you'll notice, you know, the 10-year is back. I think it is. Yeah, is back below 2. There's probably, I haven't looked at the implied probabilities yet, but I would guess that the more aggressive projections have reduced in probability as far as rate cuts. There's definitely stuff to look at in both sides there. Now, there's all sorts of unknowns that are going to keep the VIX high and volatility high for a while. For some of these sanctions, you know, if they kick Russia off of SWIFT, which I won't go into exactly what it is, but it was described on the news today. They described it as like a combination of Slack and Venmo that banks use. So 11,000 banks use it. If they kick Russia off that or other stuff in the financial world, you could get some real confusion and problems there. So that will be interesting to see, because we haven't seen anything like that really since you know, the lead up to the Great Recession, right? That was the fear there.
Yeah, and Biden did say today, you know, no action yet with SWIFT, but there's a lot that can come out of this. I mean, I'm kind of just in shock with everything. I think like we knew it was all coming. And it's kind of an interesting situation. I think my biggest shock is these markets, like they're not reacting like some big world event just took place. And that's really the amazing thing here to me. And so from a trading perspective, you know, if these things are happening and you do have confusion from the markets, right? Like bad news comes out, you should expect equities to kind of take a little bit of a tumble. They took a little tumble last night. I mean, we can see these things go down almost 500 points last night off the open. But when you start to see these markets rallying, I'm the first person to say, hey, market's in a downtrend. We've been in a really nice downtrend all night. If we see a little bit of strength, look for those shorts, take the shorts to the downside. If that's not working for you, there's a couple of things you have to do as a trader to start to think about here, right? Like if it's not making a whole lot of sense why the markets are rallying the way they did, 1,000 points low to high in the S&Ps, $8 in crude oil, things are happening and these moves are happening. I get there's a lot of excitement around wanting to be in those types of trades and catch those moves. But if it doesn't make a lot of sense to you, I'm going to strongly recommend staying away a little bit, back off these big moves. If they're not making sense, sit on your hands a little bit. Let's wait for these markets to get back into some sort of semblance of normalcy, or at least reacting the way we expect them to react to news.
Yeah, I think that's a good idea. Or at least if you're going to go with something, you know, I hope you're going with the move, right? Yeah, it's just going to be so uncertain going forward for the next couple of days. I mean, if I were, it's hard to say, if I were in, say, like a funded account or something right now, this is probably a day where if I was trading outrights, I would be sitting on my hands. Especially when you see a move that's so counterintuitive like this, especially that's, I mentioned earlier that the VIX is down on the day, that,
which is amazing. It was what, 37, I think, this morning when I woke up.
Yeah. When you see sort of moves like that, there's a lot of potential to kind of get pretty dinged on things that you have no control over. I mean, you probably don't have a strategy that you have any idea what the probability is in this sort of market.
And I think any outright trading, it's tough in this kind of market. Like this is where creating positions and taking advantage of spreads and trading that volatility, there's a chance there to be successful in this. But when you get caught in an outright, you know, let's use some examples here, right? I'm looking at the NASDAQ, and the NASDAQ, I'm looking at half-hour bars, and you got movement 100 points up and down in a half hour. And like, that's a pretty drastic move, 100 points in a half hour. You know, that's a drastic move to be getting caught in if you got some trades on. We all want to be caught on the right side of that, but those things can hurt us pretty quickly. And so as a trader, when you're caught in an outright, you have no protection other than a potential stop, which when the markets are moving as volatile as they are, these stops can get missed really quickly, especially if they're too tight. You can get missed on that stop really fast. Jack, we talked about this a couple weeks ago too, just about how stops can work in these situations. When you see this volatility increasing, you've got to increase your risk. There's no question about it. When a market is moving the way these markets have, that risk gets increased. And you have to think about that as a trader. If you don't have the appetite for risk to increase those things, it's a pure sign to stay away from the markets today.
Yeah. And this might be a good time for people. And I know we don't allow as a top step, so I hesitated. But like, if you're interested in learning about, say, spreads or butterflies, don't go out there and sling them now, but might be worth looking into as a strategy to sort of have in your pocket. Which, as I said, I probably wouldn't want to be outright anything on a day like today. So, there's still risk involved with all those things. You can lose a lot of money, sometimes a lot more by, you could be, if you're hedged in everything, you can't make any money. So you're always taking on some risk.
Yeah, you got to have some risk somewhere. But the hedging, if that's the route you're going as a trader and trading some sort of spread, you're protected. But in this case, the outrights, you just got to be cautious, and I'm not going to sit here and say, don't trade it. That's not what I want to say. If you find opportunity, by all means execute, but just always keep in your mind when volatility is the way it is. And of course, if the VIX is down, it sounds like volatility is not up. Well, the VIX is inversely correlated to these equity markets, right? So if you get the NASDAQ screaming higher, stocks, bonds, or S&P and the Dow screaming higher, you see all those things screaming higher, you're going to see the VIX come down, which in turn says, hey, volatility is down. Not totally the case. Volatility is obviously up when a market can move 1,000 points, and like the NASDAQ did here today. So the volatility is there. Markets are screaming. They're moving fast, which means you got to increase your risk. And that's the question you got to ask yourself, sitting down every day to trade, when you do have, every news channel, this was the first day in a while I've watched the news all day. But every news channel, all it is a stream of what's going on in Ukraine, what's going on with Russia. That's all we're talking about. So when you have news events like this, it's got to be cautious. It goes back to COVID. COVID, we all just kind of watch these markets move, and we're just staring at the news. What's the new information today?
Yeah. And what's tricky as well, like if you had to trade, I guess, outrights, I'm not sure how you would do it, because we always talk about levels, right? Or areas of interest, but I'm not sure how much they mean in a situation like this.
They don't mean much.
Yeah. So I think you have to ask yourself, if I agree that it is true that I don't know what's going on in this very fluid and volatile situation, and my levels don't mean anything, what's your hypothesis for trading on a day like that? Just something to think about out there. And once again, we're not going to stop you from trading. You're all big boys and big girls out there. You got to do what you got to do, but might be better ways to spend it than trading outrights today, or frankly, watching the news, which, I have to too. It's been
I'm telling you, Jack, today's most news I've watched in a long time. I've been a little distracted, trying to keep an eye on things, just trying to stay in the loop. I do want to mention one thing though, with this volatility. Again, if you're trading, a couple things to keep in mind. It's been a couple years, but limits are out there.
Yes.
This podcast is called Limit Up. There's potential for limit downs. You like that?
Yeah.
Limit downs in our future. Equity 7%. If you're trading here with Top Step, we want to see you out of your positions when we get 2% away from that mark. So for equities, it'd be if the markets are down 5%, we want to see traders getting out, so you're not caught in positions on any sort of locks.
And that is, I believe, only for the funded accounts. It's good advice in general, because what you don't want, there's a couple different levels. I think it's like 7, 13, and 20 now are the levels. They changed them after they got hit a bunch during the initial COVID crash. But
got an interesting comment in here.
Yeah.
Sandor says, dude on the left has a Russian flag on the board behind him. Sandor, that's very opposite of Russia. That's the 1980 Olympic hockey team that beat the Soviets. And I've got all their autographs on there. So for those that are curious, it's the 1980 Olympic hockey team jersey.
Yeah, I'm glad that Sandor pointed out, because that would be some, deceptive editing otherwise.
Right. It'd be kind of weird. So I'm glad it is not a Russian flag. It is the United States of America hockey team. That beat the Russians, or the
Yeah,
Soviets, I should say, in 1980. Miracle on Ice.
it's going to be harder for me to describe, to explain away the sickle and hammer behind my head. That's not there. But yeah, so what you don't want to do with those limits is definitely don't be on the side that you can't get out of, right? I mean, if you're not, frankly, it's really only going to happen in equities to the downside. I may come to rue this day, but like, if you're not short, if you're trying to catch that and you get stuck, you are in a world of hurt, because chances are it's going to open up way past any semblance of a puke limit you had. There's nothing you can do about it. You literally can't get out of it.
You can't. This is time where traders are going to get hurt. People are going to get caught in things. Anyone with size on, you're going to hear about institutions. If these markets get big moving, start making some big downside moves, you're going to hear about institutions hurting, struggling. So just things to keep in mind as the news kind of unfolds here, right? We're learning stuff minute by minute. Sounds like there's more on the horizon, potential stuff with China in Taiwan over there. So there's just a lot happening that everyone just to be cautious as traders. That's the biggest thing I can't stress enough here. I'll tell you for 100% fact, I'm not touching a damn thing tomorrow. It's a Friday. I'm not going into the weekend frustrated or thinking about bad things happening. I'm not trading Sunday night with potential news there, because what time is it in Russia and Ukraine? Everything's going to happen in the overnight session. So try and stay away from those things if you can.
Yeah, that's good advice for the parting. And sorry, we're kind of freewheeling it today. It just didn't feel appropriate, right, to talk really about anything else. Like if we were trying to talk about, I don't know,
exactly. But sometimes we gotta kind of we gotta kind of freewheel when things like this are happening. I mean, every minute I'm looking up and I'm getting a new headline. White House briefings are coming now. All of a sudden, everything that's going on, we're just learning more and more as the minutes go. So it's kind of hard to kind of plan and outline what we're going to talk about.
Yeah. So I guess any last advice here before we sign off for it? I don't know how much more we have on this. I would just say, make sure you have your catastrophic stop set. Watch out if you're, making margin trades and things like that. The margin rates are way up, right?
They've doubled.
Okay. That's,
and
that's
if you do have brokerage accounts out there outside of Top Step, just make sure you're paying attention to what those margins are. If you're in a country that may be affected by everything going on or involved in these situations, make sure you reach out to your brokerage account. I would also say, just be cautious with this trade. Be careful out there.
Yeah. Be careful. Stay safe, everyone. And we'll see you next week. That's all for this sort of emergency episode of Limit Up. So Dan, thanks for having me on.
Absolutely. Jack, you're going to send us home the way you always do?
Oh yeah. Now that I've
feel like
said
it
everyone's
goes
safe.
well today.
Yes. Yeah. The whole world right now can honestly namaste, chill. That's a yoga thing that they say at the end of it or whatever. We need to all just take a couple deep breaths here and figure out what we're doing. So namaste and